Good morning. Welcome to the E3 Weekly Market Report. Exports have just come out, and we'll go right to those. Starting with cotton, we have sales of 124,900 running bales for 2015-2016. That's down 3% from the previous week, but up 4% over the 4-week average. Vietnam took 42,500. China took 21,300. Indonesia took 13,100. We have also 2016-2017 net sales of 74,300. Looking at that market, the July cotton was up 63. Just before this report, December cotton was up 62. Right now, that market in July has rallied. It's up 84, and December is up 79. So the market has reacted in a positive way to these numbers. Let's next go to soybeans. Net sales of 309,400 metric tons. That's down 32% from the previous week and down 39% from the 4-week average. China took 123,500 metric tons. The Netherlands took 75,200 metric tons. Malaysia took 33,000 metric tons. We are looking at soybeans. Just before the report, we were up quite a bit already. The July soybeans were up 18. November soybeans were up 10. Right now, July soybeans are up 19, and November soybeans are up 8. Let's go to corn. Net sales of 1,317,900 metric tons. That's down 5% from the previous week, but up 12% over the 4-week average. Unknown destinations took 448,900. Japan took 244,200. Taiwan took 189,500. The corn market, just before the report, both July corn and December corn were up 1 penny and a quarter. Right now, corn is still about the same level, up about 1 penny to 1 penny and a quarter. Wheat, the wheat number was 107,400 metric tons, up noticeably from the previous week, but down 33% from the 4-week average. Yemen took 52,300 metric tons. Japan took 33,700 metric tons, and Costa Rica took 12,700 metric tons. Looking at wheat, the wheat market in July was up 1 before this report. Right now, wheat is up 2. Looking back over at cotton, right now the cotton market just made a new high at 63.79 in July. That is up 92. So very active market also. Let's look at a little bit about what's happened this week. On Tuesday, we had our crop progress report came out, and as far as planting goes and emergence, everything was right at the 5-year average, or even better than the 5-year average for this time of the year. So no real surprises there. Let's look at grains. Soybeans have led the way in this grain rally. We've seen different reasons for that. Good soybean demand has been one reason. We've had very good speculative buying from funds, and also weather difficulties in South America with regard to getting their crop out and getting it moved. All those things have been positive for beans. That spilled over into corn. Also in corn, we've seen very strong ethanol prices, and those things, along with the soybean strength, have been positive there. Global wheat markets are in pretty good shape. Don't expect a real dramatic change in demand. Based on the technicals and what analysts are saying, here are estimates for what the market could do to the upside. Soybeans could get into the area of 1165 to 1190. Right now, that market is at 1160. Corn upside could get to 440, as high as 450, which is quite a change from what we thought a couple of weeks ago. Right now, that market's at 417, and the wheat market could get into the 495 to $5 level, and right now it's at 487 and a quarter. This is normally the time of the year that wheat sells off. I think some of the reason it's held in here is because of the strength in beans and corn. That's advice as far as what to do. we had talked in the past about scale-up selling of the market. I think that probably would be good advice for farmers with this market moving up. Let's look at cotton. We've been trapped in a trading range of 62 cents to 65 cents in July. Upside resistance is found at those higher levels because of China selling cotton from their reserve. The downside support seems to come in because the demand for cotton or the limited physical supplies we've got, so there's demand as the market sells off. I'm going to read you the "So Where Do We Go From Here" portion of Plexus newsletter that came out yesterday. So where do we go from here? The old saying that history doesn't repeat itself, but it often rhymes, seems to apply to the current cotton market, as it follows in a similar path as a year ago. What's different is that the ROW has less cotton available, which is supportive, while China's reserve sale should have a negative impact over time. To us, it all adds up to a market that's going to trade sideways between 62 and 65 cents as we head into the July notice period. As far as outlook goes in cotton, I think once you get cotton off the board, the July or even past first notice day, I think there's a chance that we could see December start to move lower. Some analysts have talked about getting back into the 50s. Some analysts talk about 58 to 59. I've even heard some talking about 55 as a possible downside. That's not going to happen until July gets off the board. Right now, it still seems to be an up and down swinging market between 62 and 65, although, as we know, cotton always goes a little further up or down than analysts say, so be prepared for that. So that's it. We will talk to you later. Thanks for joining us for the E3 Weekly Market Report. Have a good day.